Okay, we'll jump in, man, because I'm interested to see these numbers this month. Compare, what we've seen in the field to what the numbers are showing. This is the July market update, where we look at numbers through June, see how we're doing overall. And I'll do the real quick rundown. We're going to do homes sold, average list price to sales price. We're going to do percentage over and asking and under, days of the market, and then the amount of price reductions we're having. Gives us a good overall snapshot of what's been happening up to this point or up to last month. So Danny, let's run through real quick. Number of homes sold.
Yes. So number of homes sold, you can see, came in a little bit better than last month. To be exact, it was 6% up from May. And also you can see they're up 6% from the same time last year. So we finished just under 2,400 homes that were sold. Current inventory is just under 3,600. So that puts the months of supply at 1.5 months, which is up a little bit if you've been paying attention for these last couple of months, but still relatively quick in the big scheme of things. Still very much, I would say, a seller's market.
Yeah, so I actually like that number is creeping up, inventory rather, because that's how we start to balance the market. That's how we get in less fights over particular houses. We just have more options. I like to see that. Still a seller's market, like you said, with the month's supply pretty low, but everything's creeping up. I like the way that's moving. And I think we're starting to see that more, out in the field than before. Yep, number of homes up, market's rebalancing. I like to see that inventory number a lot higher. At one point, just post-COVID, we were in the 1,400 neighborhood of current inventory. This is way better. It's a sign of starting to balance, and then just overall numbers going up. I think buyers are happy to see that as well. Average list price versus average sales price, though, can be a different story, but let's run through that real quick.
Yeah, this is just a continuation of the trend, right? We see that things go up, they go down. Typically, prices go up when there's more competition in the spring and summer. If you've been watching this for a while now, you know that story, and they cool off in the winter. You can see here that we're following the same trend. You can see that the average list price was just under 430,000. The average sold price was just over 425,000. So those are both really close. We're actually up $8,000 in that that sold price month over month, which is about 2%. And if you scroll back across to June of last year, you can see that we're up about 16,500, so 4% year over year. And that's the thing. This thing goes up and down, but the long-term year over year over year, it's always slightly higher, right? And that's what we continue to see, which I believe is a reflection of just the constrained supply that we see in the market, and obviously other macro factors like inflation and that sort of thing. But yeah, things are up this month.
Yeah, that's the universal lesson: is houses get more expensive over time. We've been tracking this now for several years. That's consistent. We have seasonal dips for averages, but overall, they just get more expensive. So I feel bad for people that were expecting a crash like around the COVID era and got out of the home ownership game. They're missing out on a lot of appreciation. So if you are just getting into it or getting back into it, I would do it sooner rather than later, regardless of the seasonality, regardless of the interest rate, because you can recast those things later. You're never going to get a cheaper price, though. So overall, it's going to get up. This time next year, we expect it to be more again. There's no reason it wouldn't be. So earlier you get in the game, the better. It's just hard to get in the game now. The next chart is our donut chart. That gives you an idea of how often things are going above or below asking.
Yeah. Yeah, and we make that, anything in the blue is within plus or minus 5% of the asking price. We think that's just kind of normal. So this is really a measure of the normal and then the extremes, right? So the green is anything that went 5% or more above the asking price. You can see that was 10% of homes that were sold. And then the orange section is anything that went 5% or more below asking. So that was 18% of the share of homes sold last month. This is a little different because what we would see is as the market cooled off, this chart would shift and most of the green would trade with the orange. in the kind of cooler months, right? So things would be going below asking when there was less competition. And then when we got into spring and summer, where there were a lot of people vying for the limited supply of houses that were on the market, we'd see that green go up because there was more competition. People would be putting their highest and best offers in. This is a little bit lower than I would have expected for this month, right? This is when things should be heating up, and those really should probably be reversed, but they're not. So that'll have to be a watch item for us going into next month and the rest of the summer. Is that kind of a leading indicator of things maybe, I don't know about cooling down, but maybe just balancing out? I don't know.
Yeah, probably. So if I remember, and I don't remember great, but I think both of those, the green and the orange section, have increased since last month, which is surprising. Like you said, there are more homes going over, significantly over, and more homes going significantly under. So we're starting to balance out. I think one of the lessons you can take from that, this is advice we give all the time, is if you're going to get top dollar, you have to be the best in the market. And this is another version of separation there. We'll continue to watch that. That's I think a good indicator. Days in the market lower than last month, but that's as expected for this seasonality. Danny, you want to run us through details?
Yeah, it's about the same as last year, right? This past month in June, we had an average days on market of 22. The median was 6 days on market. You can see that's flat to May. And if you look all the way back across to June of last year, we had a 21-day average and a 5-day median. So we're right in the ballpark of where we were before. And again, if you look at that curve over last summer, this is kind of the low point. This is really where we expect things to remain as we go through the rest of the summer before they start to tick up into the fall.
Yeah, that's the same number. Effectively, if you get an offer on day 6 instead of day 5, you're still doing very well. Still a seller's market there. Number of price reductions right in line with last month, but again, over this time last year, indicating maybe a balancing out of the market.
Yeah, this is 3 months in a row now. We're at 24%. I had to check and make sure that there wasn't something wrong with my numbers there. But yeah, it's holding steady. Yeah, again, if you look back at the seasonality of this, when things really were hot, you need less price reductions to get things to move. And you see that picks up over the winter and then trails off and starts to dip into the spring and summer. We saw that dip. It was very significant this year, and then it's just flattened out. So we didn't get quite as low as we were at this time last year. And again, a watch item for us in the months ahead.
Yeah, and then final chart, mortgage rates. We always track this a little bit because everyone's concerned. 6.67 is the average when we pulled these numbers. That's not a real rate, so I'd say 6.5 to 6.75, or 6.625, I guess, would be the real rate you could get. It just depends on what day you go into contract. So something to keep in mind, we have been within a point, interest rate point, of our current interest rate for the past 4 years. There's been not significant changes there, and prices have gone up a total of the neighborhood of 20%. So those of you that are waiting for the interest rates to drop, you're missing the bigger picture. I think it's going to get more expensive. Again, not a bad time to get into a place, and then you can always refi after the fact. That's if you know anybody that's been in a house for 20 years or so, they didn't buy at the low interest rates. That happened after they were living there, they refied. So you end up with a net positive. If we do get a drop, I think we might. I think the way that the Fed's talking and, political commentary out there, I think at some point we're going to get lower interest rates. If that happens while you're shopping, that's going to be a spike in prices and a surge in activity. So better to get in ahead of that and then just refi later. We pull all our own numbers again. Danny rather pulls all our numbers. And it's just the Central Ohio zip codes pictured here. Gives a little snapshot of what's been active this past month, number of sales by zip code. So if you're interested in that, that's a good graph to check out. We do not rely on the industry data because that reach gets pretty far. We have Cleveland and Cincinnati listings in our MLS sometimes, and that's really not our market. So Danny pulls all these numbers. Thank you for always doing that, my man. gives us a best idea of what's happening locally. And if you guys have any questions, obviously feel free to reach out. Danny, thanks as always for pulling the numbers. We'll see you next
All
month.
right.